It has never been more important for our clients to find new mechanisms for payment processes whilst ensuring that they are protected from regulatory and reputational risk.
Hello, and welcome to the Bankers Masterclass series in association with Accuity, discussing how payment organizations can plan to protect their future and reputation in payments. I'm Joy McKnight, Deputy Editor at The Banker, and I'm joined by Neela Das, Head of Product Innovation at Accuity, a global payments and financial crime compliance company. In Chapter 1 of this three-part series, we will look at how payment providers, and that is both established financial institutions and new entrant payment service providers, so-called PSPs, can keep the payments promises they make with their clients with better and safer payments at a time of huge change in the payments industry. Neela, thank you so much for joining us today. There's a huge amount of change happening in the payments industry. So on the one hand, there's a lot of innovation, and on the other hand, there's a lot of competition, new competition coming in. How are these trends really impacting how payments are being processed?
So for all our clients and the customers they serve, the ability to process payments across markets globally has always been a really powerful capability. It can drive significant business opportunity by connecting clients across the world. However, with that opportunity, there is the real risk of money being sent to the wrong types of people and organisations. So when you look at the landscape where constant evolution of technology, service providers and customer expectations is simply the norm now, there is equally innovation opportunities and financial crime risk. So at Accuity, we help all kinds of payment providers with both the opportunities and risks of both real-time and batch payments. And at this moment in time, where there is so much change going on to be better, safer and faster, it has never been more important for our clients to find new mechanisms for payment processes whilst ensuring that they are protected from regulatory and reputational risk.
Okay, so you're talking about innovation, and obviously there's a lot of new technologies coming into play. Yeah. How is this really impacting the payment service providers that we see in the market today?
Well, unsurprisingly, there's a lot of change, which in turn creates more competition and a pressure to differentiate and innovate. At the same time, we have to think about the fact that there may be real impact on pricing, because generally when there's greater supply, the market tends to want lower costs. So all our customers, whether they be financial institutions or payment service providers, are having to be more creative with their payment processes, whilst at the same time, they have to think more strategically about where it is that they fit within the market. Relatedly, we're seeing a lot of collaboration, therefore, between FIs, technology and PSP organisations. And this is more logical than it may seem at first, since it combines payments innovation with the kind of capital and customer trust that a traditional financial institution can provide. Nowadays, however, the protection of reputation, especially when it comes to the risk of compliance breaches and reputational risk, is becoming an ever greater concern. And with so many payment options on the market, insufficient regulatory control could cause a given payment provider to lose customers because they're not protected well enough.
Okay, but obviously there's a difference between the incumbent financial institutions and the sort of the newcomers, the new incumbents, the payment service providers. How do you see that difference in the market?
So for the traditional financial institutions, their greatest challenges tend to be around their ability to innovate and to create the kind of robust and customer-friendly services that we're seeing from the emerging players. They often have a real headache because they're trying to migrate older technologies whilst they're trying to meet those evolving customer needs. In parallel, banks certainly are being forced to consider the impact and the strategic play of being in this payments market in the first place, especially in the context of the kinds of opportunities that it might bring them in cross-selling and upselling to their existing customers. So they have change, they have greater competition, and then on top of that, financial institutions have to address an expanding and more rigorous amount of auditor scrutiny. So that leaves them with some really difficult decisions to make when it comes to investments. Do you spend your precious resources to innovate payments, or do you spend it making sure that you're up to date with the latest regulatory requirements? It's a really tough place to be in.
Okay, and then on the other side, the payment service providers, sort of the new movers into this space, what are the challenges that they face?
So for the fintech PSPs, it's all about focusing on customer trust and buy-in, because typically in that market, the banks have much stronger credibility and loyalty. And when you think about those really valuable corporate customers, that's where the profitability lies, and they still need to be convinced. And I mean, it's slightly stating the obvious, but as an emerging new provider, you have to offer the kind of services that really differentiate from the existing offering in order for potential customers to think about even switching from their current providers. The PSPs have another additional challenge, which is the converse to the banking strategy, which is that they don't own the relationship. So they don't have the same opportunities to cross-sell to the end customer in the way that maybe a traditional financial institution does. In addition, obviously, there is a new headache of compliance and regulation. And I say new because often that is something that those businesses haven't had to encounter before. So more and more we see that emerging PSPs realise that they need to be able to prove compliance and regulatory control in order to really win those high-value business clients.
Okay, so taking it to the higher level,
Yeah.
if you really think about all these changes, how can the payment players really sort of, cement their position in the payments landscape of the future?
So innovation has been a hallmark of the payments industry, and is integral to our history as well. So whether that's about finding new ways to collect and deliver the data for more accurate payment processing, or leveraging new technologies in order to screen transactions, we certainly have been successful because we've been able to combine working with our clients and innovating with them whilst trying to meet the latest industry needs. And whilst historically we certainly have had many customers across the kind of more traditional financial institutions, we've also recently been working more with customers who'd be defined as fintechs, helping them with our specially tailored payment and risk and compliance needs. Often that might mean a new technology approach, a new data approach. All of those are things that we have to consider for the new needs of these new customers.
And so how do you think that organizations can future-proof their payments business?
I think it's hard because regulations are changing all the time. So at the moment, everyone is talking about the new Payment Services Directive and other efforts that are being made to open up the market. And I'm sure you'll be discussing some of those further in the other videos. We certainly believe that strategically there is a way forward, that actually we may be looking at a route that enables both types of players to be successful in the new market. And when you look at the Open API initiative, for instance...
So application programming interfaces?
Exactly. That should force a lowering of barriers between the traditional players and the emerging players and should lead to greater collaboration. We certainly have seen clients who have had certain approaches that have made them successful and also put them in a better strategic position to win. And those are the kinds of ideas that we're looking to share with you today. So to start off with, we could look at innovative financial institutions and payment service providers who have managed to improve their payment processes and in the process their overall payment service offering overall. At the same time, we also need to look at the screening and compliance procedures that are necessary to underpin the security of all of those transactions. It is a fast-changing world, there's a lot happening, but we're in a good position to help.
Excellent. Thank you so much for your insights, Neela.
Thank you.
In Chapter 2 of this 3-part masterclass series, in association with Accuity, on the changing payments landscape, we will be exploring the importance of accurate data in staying ahead of the competition.